What's going on, guys? So we are back with another video, and I wanted to go over my trades for today and yesterday. So yesterday I didn't make a video because I really was basically break-even day. I barely traded. I traded one stock. I think it was FENG. It was a short on FENG. So so yesterday, nothing was really hitting the scanner. I was really not interested in much. So I was watching this FENG, and it looked like, according to like the time in sales, it looked like in the level 2, it looked like this was wanting to break down below the VWAP and then go lower. So I was kind of shorting into the VWAP here, so at 525, and unfortunately it broke the VWAP here and then kind of gave me this level of consolidation and this pop up. Normally, like, if this would have gone any higher, I would have covered, but unfortunately, or I should say fortunately for me, it came right back down. So I wasn't gonna, normally 10% is my kind of where I draw the line, where I'll cut a trade no matter what. 10% is my hard stop loss, so I don't want to lose any more than 10% in any trade. So this is why I kind of have that level. So I was watching for a break of like the 240, and if it could break 240 here, I saw this kind of topping tail candle in this resistance. So I didn't want to sell into resistance because I knew it would probably come back down, which it did. And then it basically traded in a 10-cent range between 220 and 230 for the next 2 hours, 3 hours, and I basically just got tired of sitting with it, and I stopped out. And yeah, unfortunately, if I would have just waited a little bit longer, I could have maybe made a few cents. It wouldn't have been a crazy trade because you can see it bottomed out here and then just kind of kept trading in this range. So it really didn't do anything. So that's kind of why I didn't make a video to talk about it, because it really was nothing of any importance. Nothing really to learn here. It was kind of one of those, because you can see this candle here, like I saw these topping tail candles and it seemed like it was hitting a lot of resistance into the VWAP. So in this attempt here, I kind of shorted with the thought that it was gonna go up but then immediately come down and then break lower, because it had already been rejected like 3 times trying to hit the volume weighted average price. But you can see, unfortunately, it was able to break and hold above it for a minute. So this gave you this kind of quick push up towards 240. So nothing really of importance there in terms of trading. It was basically just like, this is right in here as a short setup. Like if I was just looking at this right here in this level, I would think it's a short setup, because you see these attempts to break the volume weighted average price, and then these topping tails, these doji candles that show there's a lot of selling immediately as soon as it hits the VWAP and tries to break above it. There's a ton of selling. So those are indications that it's probably going to be a short, or at least going to break lower. As we know, for this one, it didn't happen, but this is just one of those things. Sometimes trades won't do what you think they're going to do. That doesn't mean you shouldn't take the trade. It just means you need to be aware of where your stops are and be aware of what you're going to do in terms of if it goes against you, or if it basically just sits in the range for the same day. Like I said, I was willing to wait, give this thing like an hour or two to, basically from 10 to 11:30, I was basically just sitting watching the stock, and I was like, eventually I was like, it came back down close to my entry level, and I was just like, you know what, I'm getting out of this. This is, I don't want to be in this anymore, so I'm getting out. So that's what happened there. Today, I was able to make some profits on KXIN. So today, there really wasn't much going on. I was actually looking more on the short side. So I was actually looking to short GSX this morning, just because there was a short seller report about it, and they had some really bad earnings revenues. Unfortunately, right out the gate, it kind of broke back above the volume weighted average price. So that I was kind of unsure, and there was a lot of green volume back here, so I was really hesitant about it. As you can see here, it's now coming back up towards the VWAP, but at the same time, the selling volume certainly picked up in this area here, and you can kind of see that if I would have simply just shorted it at any of these levels, it would have been a decent trade. Unfortunately, I didn't short it at any of those levels, and now it's kind of just breaking down with new higher lows. If it can break above the volume weighted average price and then break this kind of 558 level, it will be a long. But unfortunately, or I should say, but either way, I'm probably not going to trade it, but I still think it's a short, mainly because of the short seller report and the fact that they missed their earnings. So there's no real catalyst for this to go up. There is a catalyst for it to go down though, so we'll have to kind of watch it in this level and see what it wants to do here. But anyway, my main trade today was on KXIN. So KXIN is like one of the electric vehicle stocks that's been shooting up. Same with like today, it was like AYRO. BLNK is going. So a lot of the electric vehicle stocks, you can see NKLA is still down on the day, but it's not very much. But either way, it's kind of been a week or a month for EV stocks. Kind of been going crazy. So that was kind of the play here. I was watching it out the gates, and I really wasn't impressed with what I was seeing in the first couple minutes. Obviously, now when you look at it, you can see that it was actually pretty strong. It held above the volume weighted average price for almost the entire move here. And at first I was looking at this level as resistance, and I was like, okay, there's a lot of resistance at the 440 level. So if it can't break that level, then it's not going to be a long for me. So as I was watching it in this level, I saw it was able to break that level here, and I was like, okay, now I'm very interested. Unfortunately, I was kind of hesitant because when I was watching the tape, it seemed very strong, but at the same time, it seemed like there was a lot of red volume coming in, but and you can see kind of even on this big green volume, there was still a lot of red volume. Once it was able to break that level, there was a lot of resistance. So I was kind of waiting in this area to see if it could break this level, hold above the $0.50 of 450. And then I was willing to take a long and go higher, because once it broke that level and held above it, I knew that the $0.50 would act as support. And because you also see the volume weighted average price here, now at 472, back then it was around 450. So because of that level there, I was confident in taking this setup. I was waiting for these pullbacks to go back down towards the $0.50. So it hit, it kind of did a quick flush down to 475, and I immediately hit the buy button because I was anticipating a break of $5, and I was really, hoping. Well, I should say hoping, but I kind of, I should have maybe held it for the next minute, because as you see here, it was able to make a nice move. But there was a lot of resistance forming at like the 2 or the 530 level, and I was basically just like, you know what? I've already made my 10%. Once I hit 525, 526 level area, I already made my profit for the day. So because of that, I was happy to hit the, basically hit the bid and or hit the ask and get out. Sell on the ask and just get out. Send a market order in, knowing that I could get back in if it wanted to retest those levels. And immediately there was a flush down to 527. Now I bought this flush. I bought this dip at 527, hoping that it would hold that kind of 520, 525 quarter, and bounce back up to the $0.50 and maybe give us some continuation. And you can kind of see that it did do this. But unfortunately, it was very choppy. And what ended up happening was it shot up to like, 531, 532, 534, and then almost immediately flushed back down, and then jumped up to 540, and then flushed back down to 521. And in that level there, in that candle, I was really I really didn't want to get stuck in a rejection and a reversal down towards the volume weighted average price. As you can see, that's what happened. So I didn't want to get stuck in that, hoping for a move higher. So I just got out, basically break even, 5-cent loss, nothing big. It was like, $10, not even a $10 loss. So I was willing to take that after already making my profits in the morning, hitting my profit target, and then basically, I didn't necessarily hit my profit target, but I hit my my percentage target, which is generally 10%. Generally, my idea is if you can make 10% a day, especially if you're trading with like around $1,000 in trade, you can make $100 a day. And to me, like $100 American a day is basically, what I would make at work. So that's, to me, this is a job. It's not a hobby where I just do it, come in and I'm like, oh yeah, I made $20. Hi, I'm happy. No, my goal is to make the same amount of money I would make it working. And after, maybe 3 or 4 months down the road, as you build your account up, you're then able to take trades of $2,000, and that gives you $200 a day winner with that same 10%. So you're always looking to get that 10% win, which is why, some people, they'll lose because they'll hold into these moves hoping for a move higher, and they'll keep adding. They'll buy down here, and then they'll look at this, oh, it broke the half dollar, it broke the whole dollar. They'll add at 520, they'll add at 530, they'll add at 540, and then they'll see it hit 570, and they'll be like, oh, this is gonna break 6. So they'll hold, and then it comes back down, and they're still holding, hoping for it to move higher, and next thing you know, you're back down below your initial entry. And with all the times you've added, you're now down, 3 times what you would have been up if you would have just sold into that immediate push at 10%, which is why I always have a hard 10%. I want to make 10% on the trade. That's going to be my profit target. Obviously, if I see like insane strength, I will hold and maybe average down. So I'll sell half my position and then hold, hoping for a move higher. And obviously, if that doesn't happen, then I'm in a position to basically cut the trade or hold and get out if it goes back down towards my entry price. So one of the biggest things about when I'm going long on a stock like this is when I get in at around this $0.50 mark, my exit, my stop loss is the $0.50. It's the volume weighted average price and the $0.50, and they were both around 450. So when I got in at 475, my stop loss is the volume weighted average price, and it's for the $0.50 mark. So if it can't hold those levels, say immediately in this next candle, say it broke down and hit the VWAP and then broke it, I would sell. If it came down and hit the $0.50, hit 450, and then kind of bounced up, I wouldn't sell. I would wait, because sometimes you'll find support at the $0.50. As you can see, it's basically held this $0.50 for the last 20 minutes, and now it's moving higher again, back over 5, right? So in these ranges, you can use the volume weighted average price as a level of support, right? You can see 475, and you can see how it just keeps bouncing off of those levels. So when you see something that has a lot of strength, you want to be anticipating that when it dips down and gets close to the volume weighted average price, that it is going to dip, it is going to bounce off that and give you a move higher. And when you're getting in for an entry, you want to get as close to the volume weighted average price as your entry that you can get, and then you're simply holding for a move higher, hoping, like I said, for 10% or a nice move, whatever your profit target is. Hopefully you can hit that, get out, and then walk away, because you don't want to be holding these stocks for 3 or 4 hours hoping for a move, and it just kind of, like yesterday in FENG, when I was hoping for the short, I was sitting there for an hour and a half and it basically just did nothing, just bounced back between 10 cents, basically giving you no loss but giving you no gain either, and you're basically wasting your time. Time is money. So if you're sitting there for 2 hours and you don't make anything, you just pay commissions, you lose on the commissions, you're basically down, right? So I don't like that. I'd prefer have this quick 2, 3, 4 minute trade, in, out, and then again you try again. If it doesn't, then you're out again, right? And like I said, this was literally a 30-40 second trade in which I was trying to catch a move higher, didn't, so I was out, right? And I probably, in hindsight, if what I probably should have done if I was gonna do this is waited for the bounce off the volume weighted average price. So waited till it came back down to 475 and then bought it as close to there as I could. The problem there is that sometimes these stocks, especially if they have like a lot of green volume, as you can see this green volume here, these green candles are really strong. Like this is 3 million shares of volume right there, all buying volume. And yeah, you see these 2 red candles, but as I said, when I bought it, it wasn't necessarily like this big of volume on the red. So I was just seeing, okay, there's a 1 minute pullback, let's get in for the move higher, right? As you can see, obviously there was a big sell-off, but you never know. If you get in there and it bounces back up, test 6, then you it's a nice trade, right? And you're going to be happy with that trade. So this is just kind of, you have to anticipate. Sometimes you have to give it a stab. Would it be better have waited to would it have been better to wait for it to come down to the volume weighted average price and catch a VWAP bounce? Absolutely. But this is in hindsight, right? When you're in the moment, especially after you just sold and you watched it go a little higher, you're like, okay, well, this thing now has the ability, because to me, the $0.50 of 550 was going to be the resistance level, right? So that's why I wanted to sell when it was pushing up towards that level, knowing that if it hit 550 and then immediately rejected, you could get a big wash down, which you did, right? Almost 25-30 cent wash, right? And this is where I was watching, because if it could break above 550 again and hold, this could test $6 and give us a nice move. So this is kind of just understanding levels of resistance and support and anticipating what might happen. Obviously, I stopped out for a small loss, but I already made my target percentage for the day. Wasn't necessarily my target profit goal, because I took a little smaller position in this, mainly because it's a cheaper stock. So, I didn't take as big of a position as I probably should have, but either way, I still was able to make decent profit on it, and I was happy with my trade. So that will be it for this video. Let me know what you guys think. As I said with GSX, I still think it's a short. It's just, I just don't know. The short seller report that came out about it is very, it's got a lot of problems. It's got a lot of things that are not going good for it. So shares of Chinese online tutoring company GSX Techdu are pulling back to nearly a 5-month low after the company reported its financial results for the third quarter. What happened? The Beijing-based company reported third quarter revenue of 1.97 billion yuan, which is only about 289 million, representing roughly a 253% year-over-year increase. All analysts on average had estimated revenues of 288 million, so they beat that. Yet with operating expenses ballooning by about 500%, the company reversed from a profit of 0.01 yuan per share to a loss of 3.91 yuan, or 57 cents per share. The company attributed the rising OPEX to higher customer acquisition costs in the wake of competition and extensive investments in its teaching staff, product design, content development, and technology innovations. And then there was also this report by Citron that came out basically claiming that they had falsified a lot of their data, and that there was not really basically they were committing fraud, and that there was no real that their revenues are being fabricated. So there's no real revenues is what they're saying. They're fabricating 70% of its revenues. That's what Citron had basically tweeted. They tweeted, GSX is more 2011 Chinese RTO fraud than Luckin. They're too good to be true. Story is just that, and the Chinese media and Gov agrees. We believe up to 70% revenue is fabricated. Stock should get halted and investigated. Now, Citron does this a lot, and when they tweet this, or like Muddy Waters or whoever it is, when they tweet stuff like this, you typically get a big sell-off. You could see what happened with Luckin Coffee. If you go back and look at the stock, the same thing happened where Citron put out this report, and then all of a sudden, the stock is gone, and now you can see that LK is not even a stock anymore. So Luckin Coffee is not even, you can't even buy it anymore. You can't even, it's not even a stock to buy on the exchange anymore. See? Oh, okay. So well, it is, but it's now LKNCY. Interesting, but it's not yeah. Either way, like it went from basically $100 to like $2, right? And you can see it here. So this is the move here, right? It went from like $50 to $9, basically within a 3-4 month span after Citron had tweeted that they were fabricating their revenues and that they were lying about their revenue estimates and their customer base. So that's something to keep in mind. When you see these seller reports, you kind of want to be cognizant of what they're pointing out, and you want to kind of pay attention, because you can catch nice moves from those things. And you can see GSX has basically been going down, and especially, you could see it's basically been going down for the past few months since they missed their revenues, and all of these reports have been coming out. But the report that came out by Citron came out here, and the stock was trading at almost $70, and it dropped down to 50 in a day. Right now it's at 55, but obviously I think it's probably going to be a short as well, and it might keep breaking down from these levels. So we're going to see. Anyway, that's probably going to be it for this video. Hopefully you guys like and subscribe. Let me know what you guys think. Hopefully I'll be back with another video on Monday. I will. Normally if I don't make a video for the day, it's because I either didn't trade or what I traded wasn't worth talking about. Basically it was break even. Obviously if I have a loss, I will make a video unless I'm too emotional, in which I will wait probably until the next day and make a video. But sometimes I just don't find anything to trade, so I don't end up trading. But other than that, I will try to make a video every day for the next few months. So throughout the rest of November into January or December and January, I will hopefully be making videos every day. So hopefully you guys can stay with me on this journey, see where I can bring my trading account to. Today I'm up roughly like $70-$80 Canadian. So that's not bad. Gave back a little bit off the top, but still a decent day. On the week, I am basically break even because I had a bit of I lost on Tuesday, I think it was. I had a pretty bad trade on Tuesday. Well, actually, I had a few. It was a DNK. I was trying to go long on DNK and an immediate flush, so I had like a big loss there. And then I made some of it up the next day trading the same stock, DNK. So I basically was break even on DNK for the week. But then I had tried to short Riot on Tuesday, and that also led to a little bit of a loss. So I'm basically break even on the week now. So yeah. So that's how my first week went. Like I said, unfortunately, the market has not given me many opportunities. It's been a very choppy market the last week, and it kind of sucks that the first week that I've really had a chance to trade every day, we've had some pretty choppy action and nothing really popping up. You don't have a huge momentum. Nothing's really giving us those big moves. And even like KXIN today, it did give us a nice move, but you can see it really it just ran into a wall around the 550, 560 mark, and has not been able to go up anywhere near that ever since. So that's why I sell going into those levels, right? Going into those $half levels, going into those levels of resistance and support. You want to be able to anticipate those and be able to get out before it swings back in the opposite direction, right? So hit your profit target, get out, get in quick, get out quicker, and get in for another trade if you think you can catch some momentum and you want to go in for another stab. But if you can hit your profit target, your percentage target, 10%, take it. Always take it, because you're gonna be unhappy if you see it reverse and go against you almost immediately. So that's my tidbit for the day. A lot of times I would say, you got to live to trade another day. If you're not able to find anything, just step away and don't trade. That's kind of what I'm doing at this moment. I would like to trade to short GSX, but I also don't want to sit here for the next 3 or 4 hours and it just sits here around $55, right? Because you can see the volume is just dying off. Same with this. We're going into a long weekend. Well, this is not a long weekend, but next weekend we're seeing it's the Thanksgiving holiday in the U.S. So obviously these are U.S. stocks. So many traders are in the U.S. or follow the U.S. kind of holidays. So because you're going to have a short week next week, a lot of traders might take the week off, especially with this choppy of a market. A lot of traders might kind of step away and just have time with their family, and that's probably not a bad idea. I'm going to be trading though, because I have the time off, and now's my time to trade. So I'll be trading, trying to find opportunities. If there's none there, then I will be walking away for the day. But at the same time, you got to be there to catch them. You don't want to, if you're not there, you can't make money. You also can't lose money if you're not there. So it's, it kind of goes both ways. But for me, it's a learning experience. It's every day when you trade, you learn. You know, and that's the thing with me. I'm not an expert. I'm not a, you know, I'm not a guru. I'm somebody that's just trading, just an average guy that's like, hey, I can do this. I'm good at math. I'm good at, you know, studying and doing research. I'm good at understanding charts. Obviously, it took me, you know, over a year and a half to understand these charts and to be able to trade them with any sort of consistency and any sort of confidence, because that's one of the biggest things about trading is confidence. Just having the confidence to get in and get out, and knowing that, hey, even if it goes against you, you had the confidence to take the trade. One of the biggest problems I had in the first like 6 months to 8 months of trading is that I would see a big, like, I'd be like, oh, this is gonna make a big move, but I just wouldn't have the confidence to buy. I just wouldn't have that, you know, that confidence to be like, oh, well, I'm gonna hit the buy. You know, it's like now I feel like I have the confidence to buy at any level as long as I'm confident in my setup. And that's one of the biggest things. Be confident in your setups. Look for your setups. If you don't see them, don't trade. But if you see them, have the confidence to take them, knowing that even if they go against you, you followed your playbook, you have your stop loss in place, and you're basically just trading like a computer, like an algorithm. You're trading like, hey, this is the level I want to get in, this is the level I want to get out, this is what I'm going to do. I'm not going to fall victim to emotion. I'm not going to fall victim to FOMO. Obviously, you could say that like these trades here was a little bit of FOMO. It's like, oh shit, I missed this big move, now I'm going to go catch another one. But at the same time, you have to be willing to take your opportunities. So if you see a lot of momentum and you see a lot of opportunity, try it. But if you can get out for a quick, you know, basically a break even, then it's even better. Yeah, you pay commissions, but at the same time, it's like I'm still, you know, up quite a bit on the day, so it's not a big deal. But anyway, hopefully this helps. Hopefully, if you guys have any kind of concerns, or, you know, if you guys are still kind of stuck in that level of not confident enough to trade your setups, you might see them and then you see a huge runner and you're like, shit, I just missed that whole move. I wish I could have got in. I should have been confident enough to take the trade when I was watching it, you know. And that's one of those things that after doing it every day, which is why you need to show up every day, because showing up every day gives you the confidence over time to be able to take those setups. It's not like, oh, this is a setup that I just seen today, it's only on this stock. Like this setup here is you'll see it every day. This is a big setup that every day you'll see it kind of going into these 1 minute, you know, 2 minute pullbacks, and then testing off of the volume weighted average price or the $0.50, and then giving you a big rip higher. This is just understanding the way that chart wants to move, the way it's reacting to things like the volume weighted average price, to the $0.50, support, resistance. All of these things is what gives you the ability to take these trades and to profit from them. So thanks for watching, guys. Hopefully you guys enjoyed the video. Let me know what you guys think. I'll be back at you with another video on Monday. And hopefully you guys have a great weekend and happy trading. Hopefully you guys are all green, and if not, then hopefully you'll learn from your mistakes. So have a great day, guys. Thank you.